All right. Happy Wednesday night. Glad to be back on a regular schedule. Been traveling the last couple weeks here. Just got in today from Arkansas for our event at the Mastermind there. Big shout out to Kevin at 21 West End for hosting us up there in Fort Smith, Arkansas. Very nice venue, wonderful food, good atmosphere, great people. Had a really good time. So again, glad to be back. Was at Consensus last week. So we put a pause on the lives, normally do Monday and Wednesday. I think we knocked out none last week. And then we had Monday. I was traveling this week as well. So I'm glad to be back in the groove. We'll run down some questions tonight. Go through, just some things that are happening in the broader macroeconomics and different things in the space that we haven't touched on since last time. So lots of things happening. Seems like, Dallas might end up a hub for, maybe the financial center of the U.S. BlackRock and Citadel going to launch a stock market that competes with the New York Stock Exchange here in Dallas, which is where I live. So excited for that. We've had a large influx of people over the last few years from New York and California and other more liberal states, just trying to get away from the high taxation. Texas has no state tax. We don't do so great on the property tax. They get you with that here. But a lot of really good people here. I've been to a lot of other states. People open the door for you here. They're nice. Even if they have no idea who you are, what you do, or what you could do for them. People are just nice people here. So, and that happens in some other southern states as well. Some other states, depending on where you're at, people get offended when you open the door for them, which is odd to me. But anyway, yeah, it's an interesting dynamic, just cultural norms in different parts of the U.S. and globally. So anyway, that aside, that'll be cool. Be good to see if that does happen with BlackRock and Citadel and do launch that here. BlackRock's pushing for tokenization of financial products and assets. And obviously I have a proclivity for that. So hopefully we can play a part in that somehow. We definitely would love to do it. Aside from that, we had Biden veto SOB 121's repeal. So he did not approve rolling that back. Financial institutions are still not necessarily handcuffed from holding digital assets, but they don't have the go ahead, right? So the OCC says stable coins are okay for institutions to hold. And SOB 121 would allow banks and FIs to list those assets on their books, which currently isn't a thing. So it was interesting. Brad at Consensus just went ahead and lumped in the escrow with their balance sheet, which I've never heard him do before. He said that they're have 26 or 27 billion on their balance sheet. He's always been very particular in stating that those assets weren't included on their balance sheet in previous conversations when I've seen him speak publicly. So it's odd to me that he lumped that in here in the last week. And then you've had him come out, and say XRP spot ETF in 2025. You also got Monica Long and him on different large media outlets touting their stable coin, which will be RL USD, which a lot of people already know that. They've seen the trademark that was filed. Maybe I'm wrong, but I don't think so. I think that's what it's going to be. We did get to see Ripple down there at Consensus. Went to one of their events with Zonix, a company that they have given a Ripple grant to. Not overly sold on that. We'll see what they're able to execute on. We have a follow-up meeting with them, hopefully here within the next week, about some of the stuff that we're doing. So see what other synergies just off the jump I'm a little apprehensive. The gentleman that runs that platform is not a broker dealer. Seems to be connecting investors with opportunities through some type of membership model. I don't know that he has a tokenization engine associated with that, where they're minting financial products in tokenized form on the XRPL. Just need to have a further conversation. I don't think I grasp the full platform or the full vision for what he's doing. So we'll follow up with him. Right into HBAR. They're both the founders of Swirlds Labs and the Hedera Hashgraph, the creators there. We spoke with them. We spoke with the head of their business development. A couple partnerships that they'll be announcing over the next 3-4 months, which will be nice. And some big news, some really big things happening on Hedera's network. They're also looking for the capability to partner with people that are tokenizing real world assets. So if that's something you're working on, that was the theme. Everybody we spoke to, JP Morgan, Hedera Hashgraph, Ripple, Stellar, everybody there that I believe is an enterprise blockchain was looking at tokenization of real world products and financial assets. So I think that's going to continue to be the theme, along with DeFi. Starting to see a large push for institutional custody and digital identity. We did have the update to the mainnet for the XRPL today, which is like 2.2.2. Probably have that wrong, but I think that's what it was. And then we got 7 amendments that are now up for vote, including, we already had digital identity in the Exchange Bridge, but they also added oracles, which is XLS 4070, which is big. Put out a video about that earlier today. If you haven't watched it, go check it out. It's the second most important amendment that I think happens in 12 months, right after the digital identity. So big things happening. And I think some of those things are kind of precursors. In order for us to have institutional adoption at scale of the mainnet, you need some of these components to be pushed through and the amendments to go live. I did ask Vet last year. If you guys don't follow him on Twitter, I would highly recommend. Very intelligent individual, runs a validator on the XRPL. He was in Twitter Spaces last year around October when I asked him, would there be a circumstance if there was a catalyst or a problem where the validators could push something early without the 2-week, holding period? And he said, yes, there is a way that the validators could come together and, similar to Congress, kind of rush things through if they needed to, if the circumstances, were kind of a life or death situation and it was a necessity or there was systemic risk. They could basically roll things out a little bit faster if they needed to. So I don't know, complete speculation that that's even a possibility. But if you had some type of catalyst or black swan, maybe things are in place to move forward now. Those things are there. So I think it'd be cool to see, that the network and the validators could come together and push something through faster if it was needed. Kind of need that if it is systemically important, if there's certain things that could affect and cause problems globally, a liquidity crisis or something else, and this network was needed. I think that there's a possibility for that. We'll see if that transpires or if it's my tinfoil hat. But anyway, yeah, beyond that, go ahead and open it up to questions and get them into them here. We got a good number of people on the live. So if you are watching, appreciate you taking the time out on a Wednesday night, spending some time here with us. If you wouldn't mind, if you are on YouTube, just go ahead and click on the like button, subscribe to the channel if this is valuable for you, and, pass it to a friend if you think it's worth their time as well. So go ahead and hop into the questions. Anything is fair game: mitigating taxes, estate planning, broader global macroeconomics, digital assets, traditional finance, anything at consensus or about our firm or what we do, happy to answer. So we will start it off here. Robert, appreciate you hopping in early with this one. He says, part 1, is the LLC that I'm currently in the process of setting setting up through DAG. Appreciate you. Is this considered an IRA, or is an IRA something completely different altogether? Yeah, an IRA is something completely different than an LLC. So an LLC is a limited liability corporation. An IRA is, I believe it's. I don't think it's investment. It might be investment retirement account, individual retirement account. Excuse me. That's what it is. It's late, long day. An IRA is going to be qualified funds. So you could do a Roth IRA and you can pay taxes and put capital in there and purchase things inside of that. An IRA is good because you could own any type of asset in an IRA. If you do pay the tax on the front end and it's a Roth, you can add $6,500 per year up until age 50, and then you can do $7,500 per year after that. And if you didn't allocate last year, you can double down, so you can double dip. So if it's $6,500, you could do $6,500 for this year and $6,500 for last year, so you could do $13,000 inside of a Roth. Inside of a traditional IRA, you can allocate as much as you want, and it's a great way to mitigate tax implications if you are a business owner. If you're doing a self-directed IRA or a 401k, you can get write-offs for doing that, but you're going to have to pay the taxes later on those things. So always, a good option depending on how close to retirement you are. I would say, if you're up there closer to retirement, that's probably a better option for digital assets. You are encumbered in your capability to borrow against your IRA or the original contributions or the appreciation that has. If the IRA produces some type of dividend or income and that goes into a separate account, you can borrow against that. You can leverage it. You can do some different things. And those are definitely products we're working on with Digital Wealth Partners, which would be the asset manager or the wealth manager that we could orchestrate that through, which is underneath Digital Ascension Group, which is the family office. So an LLC is just a corporation that you might use as a holding company or to do business of some kind. It silos risks. If somebody were to sue that corporation, they can't come after you personally unless they pierce the corporate veil. You want to make sure that you have it filed correctly and everything's buttoned up and you have an operating agreement, which is one of the things that we provide people that work with us to set up their LLC. This is a very long-winded answer, but I kind of wanted to give you an understanding of what each of these things was and why they differed. But yes, they are two very different vehicles. And then he says, part two, if it's not considered an IRA, is it possible to set up as one, and would there be any extra benefits if setting it up that way? Yeah, so again, it's completely separate. It's a retirement account. It's not a company. And again, I kind of ran through some of the benefits and costs associated with setting up that type of account for qualified funds versus just having your assets held in an LLC. You have no problems, but you are going to have all the tax implications. And you would have penalties in an IRA if you withdrew things early before 59 and a half. So hopefully that gives you an in-depth answer for your question there, brother. Appreciate you asking it. Marvin says, do you have an option on iTrust Capital? I am in the process of giving them a try to gain more exposure to XRP. Hopefully I'm not making a mistake. Thank you. We're working on this. We should be able to start processing qualified funds. Again, something that's a self-managed IRA or a Roth IRA or a Roth LLC or, an IRA trust or an IRA LLC. We should be able to custody those funds hopefully within the next couple weeks here. Be able to migrate people off of iTrust Capital into qualified custody that we provide, and then be able to leverage those assets in some capacity to earn yield, and then deposit that into a separate account that then gives you some of those other benefits I mentioned. At iTrust Capital, they just hold it on a cold wallet in a level 4 facility. They do allow you to trade on their platform, but you're not trading real time. What they do is they have somebody go in there at 4 o'clock and they get to see the keys on your ledger, and they send it to an exchange, they swap it, and then put it back on your ledger for you. It's a very manual, potentially problematic process. It's kind of archaic in comparison to the technology that we use and the parties that we work with. And yeah, we want to make sure that we're bringing that to qualified capital. If you do have IRA and you're holding your assets with iTrust Capital or Bitcoin IRA, please reach out. I wouldn't say this next week, but the following week. And we would love to have a conversation with you about migrating those over and working with you to, get you exposure to the other products and solutions that we have for qualified funds. Let's see here. Nat says, "Hey Jake, how are you, ma'am? Once I've set up my trust here in Australia, how do I go about transferring my personal digital assets into the trust name? Do I set up a new account in an exchange? Thank you." So you would work with the attorney there that established your trust in order to gift those assets. In Australia, it's going to be a little bit different. You're going to have to pay some taxes up front when you move those assets out of your personal name into the trust, which are going to be substantially less than what they would be later on. So I would go ahead and bite the bullet just personally if I lived in Australia and get those things done now, pay the taxes associated with that earlier than later. And once they're in there, they can grow tax-free. You would want to set up accounts and bank accounts, accounts on exchanges and bank accounts affiliated with the trust, so that you could then, move your assets from qualified custody or cold wallet, whatever you're using, onto those platforms to be able to take profits if you chose to do so in the next bull run. And that would all be done inside of the trust and not in your personal name, saddling you with the tax implications. You're still going to have the tax implications there, but you could work with the advisors to make sure you're able to mitigate those. And then also, people aren't going to be able to take your assets if they're in a trust and it's structured properly. If they sue you, too bad, so sad. I don't own those assets. They're over there in the trust. I control them, but you don't get them. So love that you're being proactive and you're asking great questions. Thank you for hopping on here this evening. And it's cool. When I do these late ones, it's late for us here in the US, but it's, midday over there in Australia. So it's cool to see people from that locale. Atlantic Living, great to see you. Glad you're on here as always asking good questions. They've asked, can you help me explain a question to friends? I'll do my best. They're asking if all these whales are buying billions of XRP, why is the price not going up? Can you best advise? People aren't buying billions of XRP. If they were, you'd have more volume and their price would be going up. Well, so let me pull that back a little bit. OTC transactions don't affect market. So if you get on an exchange and you buy a bunch of XRP or you dump a bunch of XRP on the exchange in one big whack, yeah, you're going to have volatility and slippage. The way that large institutions enter the market, if that's what you're discussing, is they use TWAP or VWAP. Okay, so they partner with a firm that has access to all the different platforms, an OTC desk, and they're a broker. And what they do is they use an algorithm to trade in a certain band over a period of time and allocate capital, buy or sell. And in doing so, they can get you the best price over that period of time. So let's say it's a week and you want to put $50 million in the market. They trade in a certain band and they just buy at a certain level. And they try to match the trade so that you don't get a bunch of volatility and slippage. So then you get the best price at the best fees over that period of time, and you don't get large swings in the market. And so, we do that for our clients. If you do have a large tranche of Bitcoin that you're looking to sell, We work with people to use the TWAP or VWAP to get the best price over a period of time without paying a ton of fees and having a bunch of slippage. Like we saw one on like BitTrue a little while back where somebody dumped like, what was it, like $40 million in Bitcoin, and it plummeted down to $8,000 of Bitcoin. Like, why would you do that when there's these other options? And maybe that person just didn't know these other options existed. But yeah, that's why you don't see the volatility in the price, is people are using these other methods and partnering with people that can execute on them at a high level. And it holds price stability. You get the best price over the period, buy or sell, and you trade within a band instead of having, huge volume all at once. So hopefully that answers your question. You can better explain that to your friend, whoever that might be. Hey, Robert, he says he's in Southeast Texas here. All right, good, man. Down by Palestine or Lufkin, sounds like. At what point should I seriously look at obtaining an LLC? Will you still consider custody options for those that do not establish within your firm if we wake up millionaires? Yeah, we would love to work with you. One of the qualifications is we do require clients hold their assets in an LLC or a trust. It helps make sure that we know who's involved. We know who the assets are supposed to go to. We know who the trustee is. And it benefits you too, right? So you're going to have the capability to mitigate tax implications. You're going to have a lot of flexibility in establishing your estate after that. You're not going to have to deal with, taxes as you're putting it into the trust or into the LLC post depreciation. It gives you an opportunity to set up life insurance policies in a way that you can write those off, those allocations to the life insurance through a key employee situation. You can buy other assets that benefit you and your family. So, we're happy to work with people, even if you don't have enough assets now to be able to qualify, which is $100,000 worth. Would love to work with people as things do appreciate. But again, one of the qualifiers that we do have is you set up some type of entity that holds the assets to be able to participate. And you asked kind of when should you look at doing that? It's different for everybody. So I just look at some different considerations. If you're going to sell anything during this bull run and you have a way to allocate that to mitigate the taxes, so you're going to buy property and use cost seg to offset the tax implications. You're going to buy a vehicle and use Section 179 of the tax code because it's over 6,000 pounds, and you can use accelerated depreciation so you don't have to pay as much tax. If you're going to use it to purchase a business, like I talk about, like a car wash or a rental property or a laundromat, right? Like there's a lot of different ways that you can use the capital in an LLC or a trust to go ahead and purchase other cash flowing assets. Those are all reasons you might set up an LLC now, even if you didn't have, a huge amount of, or whatever you consider a huge amount of assets. If you have a meaningful amount for you, then that's plenty. So the other thing is just from a pure math standpoint, and I'm just going to speak domestically to the U.S. If you're under the Commonwealth, you need to be looking at a trust or an LLC before price appreciation. You're very limited in your gift, the ability to appropriate things post appreciation there without incurring significant tax implications. So, even if you're trying to get them out of wherever you live into another jurisdiction, you're going to have problems. So I would be proactive if you lived in one of those places in the world. If you're in the Middle East, doesn't matter. If you're in Canada, it does matter. Capital gains in Canada, it's pretty stiff. Actually just did a call with Aaron Grinhaus, who's our advisor up there that we partner with for Canadian tax mitigation, estate planning, and a lot of his network there. Anyway, so back to domestically here in the U.S. Excuse me. Each individual here in the U.S., you get 13.6 million that you can gift over your lifetime. It's your lifetime gift tax threshold. And if you believe that your assets are going to exceed that amount, it would behoove you to go ahead and get them into an LLC. And the benefit there is you can get a valuation done on the LLC, gift some pieces of equity to people that you wanted to take care of anyway, and then you can get like a 25% cost reduction or value reduction on the LLC. So let's say and each person gets that. So you and your spouse, you get 27.2 million that you could gift into a trust, post price appreciation with no tax implications. Anything beyond that's taxed at 40%. So that's why this matters. And again, if you're an individual, it's 13.6 million. If you got 20 million in assets and you're trying to move them into a trust, it's gonna be a rough go. You're gonna have to use insurance policies or do something else with the assets, or hold a portion there in the LLC separate of the trust that you set up, which are all things we can do and help you with. And we'll walk you through, when the time comes. But just to set yourself up for the best possible scenario, putting it in there would give you capability to offset that by 25%. So let's say it was the 20 million, you're an individual, you could, lower that by about $5 million. So now you're at 15 million, and you could gift, up to the 13.6 worth of equity into the trust. So you're going to leave 1.4 there at the LLC, or maybe in your personal name. Somebody sues you and get to that, or we can move it into, like I said, a life insurance policy for you as a key employee. So, if you think you're going to be less than the 13.6 when you have price appreciation, or you think you're going to have time during the run up of the asset to get this stuff situated, don't necessarily need to worry about it, especially if you're not taking profits. If you're a long-term hold, if you think it's going to be less than that amount, you're probably okay to wait. And so those are kind of the considerations around why you might want to be proactive and start setting things up now versus, you could wait till later and not have the cost right now. And you could probably make that allocation to digital assets and have more money later on, versus, spending $1,000 on the LLC. Let's see here. Jose, I appreciate the question, brother. He says, could you suggest 3 to 4 simple business ideas that for engaging with Latin American market focusing on XRP or cryptocurrencies? Ideally, these ideas should not require extensive expertise to start. I'd have to think on that one. I don't have anything offhand that would be catered toward Latin American market focusing on XRP or cryptocurrencies that wouldn't require at least a pretty decent knowledge set or expertise in the field. That's a very niche market. And then you're giving me, I don't have anything offhand. I'm sorry, Jose. Let me think on that. If things come to me further on down here in the chat, I will definitely come back up and let you know what I've come up with. Let's see. I have 2 likes 1 hour before. Appreciate you, Robert. Come on down here. Matty G, what's going on, brother? Good to see you here in the chat. Good to see you in the mastermind. He says, what are your thoughts on Uphold's vault custody? Would you recommend it for individuals who don't have the resources to use standard custody? Yeah, I think it's a good solution. It costs some money, but so does any other cold wallet. They can regenerate the keys if you lose them, which I think is a benefit. Still need to get to designate beneficiaries. There's no insurance. It's not like it's interoperable with their platform. You still got to send it from there back to their platform. But you do have, at least the type of insurance where if you lose the keys, they can be regenerated with their third key. So I think it's a good product offering. It's a good product market fit for them. There's a lot of people that were just squatting their XRP on Uphold's platform. So they turned, the cost of $15 or $20 per account per year that wasn't trading on their platform into some profit by, allowing you to be able to hold it in a cold wallet separate of where they have to use KYC and the other stuff. That's a good value add. So yeah, I think it's a good option for people that just want to hold their assets somewhere, and have the benefit of being able to regenerate the key if they were to lose it. let's see. Atlantic Living says influencers and content creators are getting more bullish every single day. If there is one key point to explain to people of the high probability of a 3 to 4 digit XRP, is there one key point? Utility. Like we're going to have to see utility, and there's prerequisites for that, and there's catalysts for it. It's not just going to happen because speculation. You're going to need a liquidity crisis of some kind on the exchanges. If they sanction Tether, that could definitely be a catalyst. If Japan launches their CBDC and starts transmitting transactions on the XRPL and FX market for SBI and R3, that's a huge catalyst. If the UK introduces MICA and those banks there start utilizing XRP to settle transactions between one another, that's a big catalyst. We also have the Middle East and the U.S. oil contract for the petrodollar ending this weekend. Does the U.S., take it in stride and start using XRP to settle transactions here to become, a big player in this new paradigm? Do we see the stock market collapse on itself because of some catalyst and they need instant settlement on the back end of that? There's just so many applications for this that could push it to 3 to 4 digits. But again, all of them require digital identity, the exchange bridge, oracles. Like there's a lot of things that are kind of up for vote right now that really would need to be pushed through. And that was kind of the premise of my conversation at the beginning. Like, until those things happen, probably not. Like just being realistic with you guys, like those amendments need to pass before there's going to be institutional adoption and like actual utility of the network. Could they rush those through if there was a catalyst? Yeah. And that's potential, not saying it's going to happen, but it could. And again, there needs to be some type of catalyst for that to happen. Otherwise, it's just going to be the same thing as the AMM and some of these other amendments. It's going to take some time. People are going to drag their feet. They'll finally vote. It'll meet the required level. Maybe it takes a back step because they find some bugs. They push the bug fixes, which they have for this round of this stuff. And then, they kind of drag their feet on those votes. And then they finally get it up there. And then it takes another 2 weeks for them to finally go through things and make sure that everything's kosher. And then they get implemented. So, the amendments that have now been proposed and are up for vote, I think those have to be through before we see actual 3 to 4 digit XRP. If I'm just being honest, without those, maybe Swift could be a catalyst and could adopt XRP for settlement. But you need digital identity, like you need OFAC, you need AML, you need KYC, you need BIS. All those things are what every financial institution needs in order to be able to identify who they're participating with in a payment. And that'll be native to the XRP-L because of XLS 30. And then you need the cross-chain bridge for smart contract capability for hooks in the EVM to be compatible with the mainnet. For CBDCs, if anybody's going to be launching a CBDC, they're going to want smart contracts to be able to pass that out to people and put stipulations on that currency. Before that's done, probably not. And you need CBDCs being settled on the network. It's not going to be fiat currency. So until there's CBDCs that are issued in these jurisdictions or stable coins, privately held stable coins that are backed like Ripple's, transacting over the mainnet, probably not going to see 3 or 4 digits. And then same thing for price oracles. I talked about the stock market and the instant settlement of that. You have to be able to tokenize the stocks. Cool. It's a currency. The acquisition that the DCCC made last year has the capability to build out the full life cycle of a tokenized financial stock, right? So the minting, the trading, the aggregation, the burning, the splitting, whatever they needed to do with the stock, they have the capability. But until they have oracles to be able to push the traditional stock market on chain to be able to provide that data, for the smart contracts and everything else within that ecosystem, not going to happen. So really, this set of amendments that are up for vote right now, they're prerequisites for the price appreciation that we're all hoping for. And really, until those things are ushered through, I don't think that we're going to see the price point that a lot of us are hoping for. If we do get some type of run up, I've said this before, I don't think it would even get to all-time high. Be less than $3 probably, just because there's more XRP on the market than there was in 2017. The last time that we saw a run up like that was right after Ripple escrowed half the supply. We still hold that, in escrow, but there's more on the market now than there was then. And it would, at best, I think you could see like $3 maybe, without actual institutions utilizing it at scale. So would love to be wrong. Would love to see the 10 or 13 that a lot of people predict and have been predicting for a long time. But I think if you look at the chart and time span that the original, run up happened from when the chart starts, and then the length of time that we've been now, that's very protracted. And this is almost double the length of time that the original one took. So in order to have the same percentage run up, I think it would probably be double or more on a log scale. And that's when you get into those crazy numbers that you're looking at there. And again, the only way that happens is utility of the asset. So great question. I probably rambled on there, but that is one of the things that I've really been thinking about lately is these amendments that are up for vote and their impact on price once they are passed. Let's see here. Scroll on down. Appreciate everybody here in the chat. Again, you guys could be doing a lot of other things on Wednesday night, so just want to say that you are very much appreciated for being here on the channel and supporting me and caring what I have to say. It's cool to be able to just provide value and have people that are interested and have these candid conversations. Utility Maximus has asked, what certification did Mikkel get that qualified him to work with you? So he has a Series 65. He's a licensed financial advisor. We have an IA, or an investment advisory group, called Digital Wealth Partners, that is registered with FinCEN and the SEC. And because of that license, he can hang that with our firm and then advise or give financial advice to our clients. So if it's something that you're interested in, if you do have a Series 65, we are looking for other people to expand the firm. Obviously, go through the interview process and there's some other qualifications that are required. But always looking for other people that are intelligent in the space and understand, where this asset class is going and have, I would rather somebody have a deeper expertise on the digital asset side of things than the TradFi, because when you get somebody that's been in TradFi for 10 or 15 years, they just have a certain paradigm that they abide by, and they don't necessarily understand all the nuance or nomenclature jargon that people use in this asset class. What did I see earlier today? There was a gentleman that he goes and helps RIAs. I think he's with Bitwise, and he said that there was an asset manager that he was talking to today that manages $2.5 billion, and they had never heard the term the flippening before, which basically ETH flipping Bitcoin. Which maybe that'll happen, maybe it won't. I don't think so. I don't think it'll just be Bitcoin that ETH flips. I think it'll be XRP that flips Bitcoin and Ethereum. But that would be the real flippening, in my opinion. But anyway, I digress. That is the certification, the Series 65 is what he took, and that's why he's able to hang that with our firm and advise clients for Digital Wealth Partners. Matty G says, what's one of your major takeaways from consensus that you weren't previously aware of, which has made you feel particularly bullish? I wouldn't necessarily say bullish. I will say this. people are still kind of in a bear market for as far as liquidity goes with a lot of these projects. There's a lot of startups and other people, even larger players in the space. I won't name names, that are looking for capital. They're still trying to grow their business, and money's tight. We're coming out of the bear market right now. People are starting to get interest again. VCs are starting to dip their toe in the water again. Back in 20 and 21, people just threw money at anything and hoped that it went up. And then we had a lot of things happen with FTX and Luna and Celsius and Voyager and all the other stuff. So now people are they're cautious. They don't necessarily want to dole out money like they did in 20 and 21. They want to vet projects. They want to make sure that they're going to be profitable. They want to make sure that they have the right team and expertise. And so that due diligence just takes longer. And interest rates are up since then, right? So now money's more expensive. If you borrow it, debt is not cheap anymore. You're paying 1 to 2 to sometimes 3% interest on a loan each month, depending on what you need and for how long. And so there's a lot of people out there that are looking for liquidity. And I think that that's going to come to this space and come rushing in when we do see adoption. But until then, so, that's probably not the answer you thought I was going to give you. I'm bullish on where things are headed by 2025 for sure. But I think we're still in for some volatility before we get there. Like I've said before, I still think the top for Bitcoin is 75,000. I think I'm the only one that's saying that. I haven't seen anybody else say that. Everybody thinks it's a foregone conclusion that we get to 100,000, 150,000, 250,000, all this cycle. I think we're a lot further along in the cycle than people actually realize. And we have one more little bump, and then the bottom falls out because we have other things happen in macroeconomics that cause it. So just my thesis, take it with a grain of salt. I've been wrong lots of times. So, but yeah, actually, so that all sounded bearish. It's probably not what you wanted, Matty G. But that I just didn't know that before I went down to consensus. I knew some people were hurting for capital, but it seemed like almost everybody there was. It's not like an H bar or a XLM or XRP. People that already have very established networks with high market caps, they weren't having a problem. But people that are up and coming, they definitely looking for capital right now. I'll go ahead and talk about this, John. He says, Jake, any news on PolySign speculation and why have they made no announcement since the boathouse issue? I think they're just trying to work through things, to be honest with you. And I told some people this weekend. I think it's a lot easier to deliver not necessarily bad news, but news that people may not enjoy on the heels of something really good. So if you had price appreciation of XRP or an IPO announcement of Ripple or something else that was great for people that are involved in this community, if you came out and said PolySign, and I don't know what's going to happen with PolySign. I still communicate with their team frequently. Jack has now moved to the head of institutional custody for Ripple. Actually have a call with them later this week. And Archax. So an Archax uses Medico as their custody solution. And they have the trust licenses and they have the capability to operate in the UK and custody assets here in the US. So, great firm there. I think they're waiting to finalize everything with the acquisition of Standard Custody. MG Stover is now beholden to Boathouse. So that debt is no longer with PolySign or Standard Custody. So, yeah, I think that they're just waiting to finalize that acquisition. The last thing we're waiting on is the money transmitter license from Ohio. So if you're in Ohio, can you tell your state to get it together? New York's already signed off. They're good, which was the one we were waiting on for the longest, but now we're still waiting on Ohio. So anyway, once that acquisition is finally complete, I think that you will get an announcement from PolySign and Ripple together around the situation. And, I'm not overly thrilled about how it was handled either. But I've also, if you're in a situation in business where your lawyers and counsel tell you to remain quiet and lay low, you remain quiet and lay low. So I can't be mad at them. I see how it is, but yeah, I wish that they would have been more transparent with what's been going on and would have made an announcement sooner. I mean, it's been 6 months, right? So anyway, that's where I'm at with it. Just being candid with you guys. So appreciate you asking the question, John. Utility Maximus, Paris. Okay, you're not that far from me. I didn't come through Paris today on my way down from Arkansas, but I've been through Paris probably 5 or 6 times this year. Thank you, Honest Aim. He says, thank you for the super chat. He says, we appreciate all you've done for us and the Beyond Broke Mastermind. When we raise a glass and toast to XRP Moonride, what type of brand of alcohol will we be hoisting? Give me 2 seconds. I'll be right back. All right, I'm back. So this was a gift from a gentleman that's a client. It's called Driftless Glen, and it's a really good bourbon. 80 or $90 for this bottle. Tastes like a $300 bottle of bourbon. So I don't drink a whole lot. I'm an old fashioned guy. That's my drink of choice. And so wherever we're at, that's probably what I'll be toasting is an old fashioned with a good bourbon. And again, if you guys want a good bourbon, I highly recommend Driftless Glen. And thank you to the client that sent that to me. It was much appreciated. Let's see here. Scroll on down. I've answered some of these. Oh man, thank you for the super chat, brother. He didn't. Or Carmen, thank you. She did not ask a question, but if you do have one, would love to answer it for you. Thank you for the donation. Mr. Jace, he says, do you think XDC Network will use Chainlink or PLI plugin for the Oracle services? What Oracle service will the XRPL use? That's a good question. I talked about that in my video earlier today. I don't know. Maybe there's a new one that emerges. Chainlink is pretty much the go-to. It's EVM compatible. So for the side chain that utilizes the EVM on the XRPL, I think that's kind of the go-to solution. If there's IoT or Internet of Things and those pieces are tokenized on the XRPL, I think IOTA is probably the Oracle that'll be used in those applications. Plugin is the go-to for XDC's network. It's a derivative or a spinoff of Chainlink. I think it works really well. I've met with the team, had a conversation with them. Great. If you want to go back and check out that video, I highly recommend it. Low market cap, not a big supply right now. If you're looking for upside, can't give you financial advice, but definitely an interesting project. Will it be used on the XRPL for its Oracle? I think it's probably the Flare time series Oracle is going to be the winner for the XRPL. I don't think people really understand how significant that is for aggregating the price and getting good data. You're incentivizing people to provide good data on the time series price Oracle. And I think that they've really refined that, and I really think that Flare will probably be bigger later on. I think banks will probably use Flare, but in the short term here, the development of the FTSO or the Flare time series Oracle, like that was probably the real game plan for launching that, because we don't have FSets yet. They're finally like starting to get into beta, and like they're using layer cake, and maybe some stuff will actually come from that, which I hope it does. But until then, that's my guess. If I was going to pick one, that's going to be the time that the Oracle for the XRPL, I would go with the FTSO. But again, depending on certain circumstances and what's interoperable on the EVM side chains, probably Chainlink as well. This person's name is SBF. That's awesome. He says, I'm ready. Let's see here. Scroll on down. Living Legacy. People here in the chat, I appreciate you guys. If you do find this valuable, if it's good for you, if you think it's helpful, if you wouldn't mind, clicking the like button, it does help the algorithm and push it to other people. And, it's a way to help the channel. Let's see. Robin says 62, maybe she should do a Roth. Yeah, I mean, it's a great vehicle. You can take those out of there tax-free post appreciation, right? Because you're already of age. You can take those distributions with no penalties or fees and no taxes if you do a Roth at your age. So you could add the 7,500 into a Roth, and if you wanted to contribute for 2 years, you could go back 1 year and do another 7,500 for last year and get 15,000 worth, and get that in I Trust Capital or Bitcoin IRA and own XRP in that. And if you saw, so that's almost 30,000 XRP. If we see $100 XRP, you got $3 million in there. You can take those distributions on a monthly basis. That'd be a pretty good deal. Pretty sweet. Total speculation, not financial advice. Got to say that. If you want financial advice, you work with Digital Wealth Partners, and Mikkel can. If you ask him if you should buy more XRP, he can tell you yes, you should buy more XRP. I can't tell you that. Atlantic Living says, oh, I already answered this one. Scroll on down here. Sometimes it like pushes me back up in the chat sometimes when I get on here. Let's see. Here's one. MLab92 says, hey, Jake, how's it going? I have family who are skeptical about XRP. You and me both, brother. Everybody. Citing its market cap and why it can't be $50. Can you help explain to them the market cap is irrelevant when it comes to utility of this asset? Yeah. So it's just supply and demand, right? They're going to understand that. So if you've ever taken an economics class, you saw the graph. You get the y and x axis, axes, and depending on the supply and demand, you would move the price further up. Right? So you got price, you have demand. The more demand, more price. There's 2 points. There's 2 lines that coincide and connect, and at one point, that's where you get the price of it. It's probably more complicated than it needs to be, but if you had 100 of something and you have 1,000 people that want it, you probably charge a pretty high price for it. So same thing here, and they're like, oh, there's 100 billion XRP and there's 50 billion that are in escrow. Okay, well, if it's a global currency and you need to settle quadrillions of dollars, you need billions. Otherwise, it'd be just astronomical price. It'd be millions of dollars per, right? And maybe it still gets there one day, but probably not, in the short term. So to answer your question, it's going to look crazy. People are going to have a hard time comprehending the market cap of XRP when it goes, but I'll just walk you through the supply and demand. So Swift, just as an example, this is just one use case, settles $5 trillion per day. Okay, so that's the volume. So that's not people buying and holding XRP. That's a volume on the network, transactions, buying, selling, or buying and holding, and sending it back and forth to be able to transmit value. Okay, so that's volume over the network. Volume is what drives price of XRP. The value moving through the token. Okay. You can, depending on how much XRP is available for that, there's 50 billion currently on the market now. Let's say it's Ripple's ODL. Okay, and they get a little bit more. They got 5 billion XRP to move $5 trillion worth of value. You can do the math on that. It's $1,000 per XRP. Okay, but you can use the same XRP. Well, is it? Yeah, I mean, 5 billion, 5 trillion. It's 1,000. Yeah. You could use the same XRP 10 times a day, and that's in the calculator for Robbie Mitchnick, who's the head of digital assets at the Federal. Sorry, that's not Michael Barr. That's at the Federal Reserve. Robbie Mitchnick is the head of digital assets at BlackRock, who made this calculator. And he said you could use XRP 10 times a day. So I'm going to go with him. Seems like a smart guy. So if that's the case, then we're only 100 times the initial amount. And so now, we're at a $100 XRP to be able to facilitate that amount of volume, moving from, this bank to that bank internationally using Swift. Hold on. We'll just say that they got 10% of the network. Okay. They didn't even get the whole network. You could still use it 10 times a day. All right. So now we're at a $10 XRP. Okay. If we got 10% of Swift and they could use the same XRP 10 times a day, and there was 5 billion XRP allocated to be able to move that volume. But then you got the FX market, you got commodities, you got the back end of the stock market, you've got derivatives, you've got, maybe there's not that much that's allocated for this. Maybe it's R3 and they only have $1 billion to do it, right? So those are the situations where XRP is going to be significantly higher in value when it's used, and the volume over the network is the catalyst, right? So hopefully that explains that for you, and it's a supply and demand situation, not necessarily market cap. This is the other crazy thing about market cap. So I'm into billion tokens. Okay, that's my supply of Jake token. I get it listed on an exchange. It is interoperable with Tether. Okay, so it's paired to Tether, and I sell 1 token of Jake token to my mom for $1. I got 1 billion of them. What's my market cap? 1 billion. Because I sold 1 token for $1, but I got 1 billion of them. So that really dumbs it down. It's a little bit more complicated than that. But I'm just saying that's really the premise of it, is the price that it's selling for on the exchange across the total amount of the token that exists is what gives you market cap. And it can be completely erroneous, right? Because that value is not really there. If it's just my mom that wants to spend $1 on Jake token, and there's nobody else that wants to buy it for $1. Once I sell it once, that's my market cap, even if there's just the one transaction. So it can be orchestrated. Market cap is meaningful when you're looking at traditional stocks and companies. When you're looking at an asset that's going to be used, I would be looking at total liquidity of the asset, and then also the supply and demand dynamics around that asset for whatever circumstance or value it's going to be transmitting. So hopefully, whoever you wanted to was listening to that and provided them some value. And you can come at me in the chat below if you want to. Let's see here. Jason A says, what would your 5 top utility assets be? XRP, probably XLM, HBAR, Casper, and XDC would probably be my. Well, you got Algorand in there. Again, IOTA, Chainlink. There's some other ones that are oracles. If I'm just picking for utility, I mean, there's a lot of things. If it's price appreciation because of utility, that's probably a different set. If it's my favorite 5 utility tokens, that's probably a different set. But I just gave you, like, if I was just going to rattle some off, those are the ones I would be looking at. It's a good question. Hawkeye says, if XRP is it, why isn't large? This is bad grammar. Why isn't large banks or government buying all of them? I don't know if you've ever participated in something like, I don't, maybe you played football. Okay, just based on your name, you said Hawkeye here. If you had one bad seed, coach would make you all run, right? You didn't get to do what you wanted. You didn't get to practice like you wanted to. If somebody went out and partied or got in trouble or, talked back or did something stupid, everybody gets punished. Okay. And then you don't do that anymore because all your buddies are like, hey, bro, like, what are you doing? You can't do that again. We're not running for you again. If you do it again, we're all going to beat you up after. So you don't do that again. It's kind of like that with XRP, I think. And maybe I'm wrong. This is just my speculation. But I think everybody has their allotment. They know what they're going to need to offset their debt. And they've been given their allocations of it. And they have the pre-orchestrated contracts. We won't know that for sure until the 1,700 pre-allocated contracts come out. And who those partnerships are and who the parties on the other side of those transactions were and the amounts that they got the XRP for. But I think everybody's been given their allotment. And they know that, and it really wouldn't even matter. So here's the other deal. There's only like 5 billion XRP across all the exchanges and retail. Retail owns, if I had to guess, 1.2 or 1.3 billion XRP, and that's it. Okay. The rest of it is held on exchanges, and the rest of it is allocated to banks, large institutions, governments, large enterprises, or who holds those wallets. So even if they wanted to go buy it all, they can't because it's already pre-allocated to all those other parties. They could buy what's left on the exchanges, but the exchanges need that also, because if I'm right and Tether gets sanctioned and liquidity freezes up, they're going to need another asset to be able to move the value within those ecosystems and provide liquidity. And that's another use case I didn't even talk about or touch on earlier on. If you go look up the Shane Ellis theory, you might check that out. Pretty sharp guy. Anyway, I think that's the deal. So like, even if they wanted to, they can't. The exchanges aren't going to give up the amounts that they already have to be able to facilitate transactions at scale later on. The banks, the FIs, the enterprises, the governments already have their allocations either held in wallets or in the escrow. And JP Morgan tried to come in and buy the escrow from Ripple, and Ripple told them no. And I don't know if that was because they already had everything pre-allocated or not, but they weren't able to do that. So, and it's a good question. I've had other people ask this question, so that's why I wanted to be particular and answer it. They can't, even if they wanted to, just because of everything already being situated the way it is. And if they wanted to buy what they could, like they could wipe out exchanges and they might get another 500 million XRP. I think is probably all that's left out there for purchase at this point. So just my 2 cents. Again, I don't know everything. That's looking at all the wallets. If you go look at XRP or rich-list.info, you can see all the wallets. You can see what percentage you are. You can see what's left out there. And then if you go to XRP scan, you can type in the exchanges and see all their wallets and go look through all that for yourself if you would like to as well. Ricardo, what's going on, brother? He says, what's up, Jake? So if I were to hold, hypothetically, if I were to hold some XRP, XLM, and XDC, how much tax would have to pay in US? None. You don't have to pay anything if you're just holding them. If you sell them, whatever your income tax rate is, if it's short-term capital gains, if it's long-term capital gains, you're going to be looking at less than $18,000 is no taxes. 18,000 to like 550. It's a bit more than that. 550K, like like 15%. Anything above that's 20% for long-term capital gains. Those are going to be the tax implications you're going to have if you liquidate. If you're just holding them, there's nothing wrong with that. You get the appreciation. You can borrow against them. That's something that we work with people to do at Digital Wealth Partners. We have partners that we've orchestrated things with that allow you to get loans against your digital assets at 7 or 8% interest. Tend to be shorter term, anywhere from 3 months to 2 years. So you can reallocate that liquidity to something else that produces cash flow that allows you to service the debt and gives you extra income. It's one of the strategies we have. But I would need more context around your question here to be able to answer it in a less, just kind of broad stroke manner. Let's see here. Zoomed out says, if I take profits into USDC or the Ripple stablecoin back into cold storage, can that be clawed back? So this is a good question. So I don't know what they're going to do with Ripple stablecoin or USDC. They do have the clawback that they implemented on the XRPL. So things that are issued assets do have the capability to be clawed back. But if there's something that's going to participate in an AMM, you don't want that functionality to be enabled. So I don't know that may be at the discretion of the fiduciary that minted or issued the asset. I think that's probably how they orchestrate that. So there will be a clawback provision for just regular transactions, but if it's issued into a liquidity pool, I don't think that they'll have that capability. So for your circumstance here, the issuer again is going to have to, basically verify that that's okay. And that's who I think will be presented with any discrepancies or claims. So like right now, like I pay for something with my Amex and I don't like this. I didn't get the service. Whatever happened, I'm going to charge back the payment. The dispute's going to be with Amex, right? So I think that's the same way it's going to work with the callback provision for a stable coin. Is I think the issuer will have to be the one to settle the claim and decide whether it should be called back or not. So that's my 2 cents on it. And appreciate you for hopping on here and asking good questions. Living Legacy says only XRP cannot be called back. That's correct. Yeah, since it's a native asset and it's been black holed and there is no issuer that has access to it, it cannot be frozen. It cannot be called back. But again, the AMMs pose an interesting conundrum there, because if you could claw it back out of an AMM, it could cause some problems. So I think they're still working through logistics on that, but I think it will be at the discretion of the issuer whether assets can be called back or not. Peter Petro says, with PolySign selling standard custody to Ripple Labs, what assets are left to warrant PolySign's intent to IPO? So PolySign never intended to IPO. It was always a token acquisition. That was every time Jack got on and spoke on behalf of PolySign, that was always the plan. So they're not going to IPO. They do have a few things left. So when Ripple purchased standard custody, PolySign was the consideration that they received for that transaction was a portion of Ripple equity along with cash. So that's still there at PolySign. And then they also have the IP. So they have the custody IP and they also have Atomic Net. What comes of all those things, I don't know. That's what we're waiting to see. And hopefully we get an announcement around that here within the next couple weeks. Let's see. Apart from real estate and precious metals, when can we quickly take profits into that? It says when. I'm assuming it means what. What can we quickly take profits into that does not involve converting into dollar, at least to hold value? I don't know why you wouldn't want to hold it in dollars. Like people that are freaking out that think the US dollar is going to collapse, you'd have pandemonium, man. Like if it does go to zero, they're immediately going to institute a new currency with a conversion rate. and maybe it'll be stable coins issued or other money issued by the Treasury or whatever it's going to be. I don't see any problem taking profit into dollars. It's what you have to use to be able to buy things. So that's just the unfortunate circumstance that we live in the real world. There's a lot of people out there that fearmonger about this stuff. We take digital assets as payment with BitPay. We're working on implementing that hopefully in the next week here. And I don't. The real estate, I can understand why you would want to swap your digital assets for that or take profits into it and exchange it for that. There are services that do transactions and swap digital assets for the real estate. Same thing with precious metals. Precious metals aren't going to be able to mitigate tax implications. Like, you're not going to be able to do cost seg on those. They also don't produce cash flow or income. They are a hedge in times of volatility or hyperinflation. I don't think metals are going to perform as well as people think they are. I would love to be wrong. I have clients that hold significant allocations to metals, and they think I'm crazy. And they're like, no, gold's going to 50,000. Cool. I hope it does. Same thing with silver. They think it's going to $500 or $1,000. Cool. I hope it does. I don't think so. I would love to be wrong, but I don't think so. Precious metals are just a hedge against inflation. They hold the purchasing power of whenever you invested in them. Same thing as the S&P 500, right? Like, I don't think you ever get any real returns. Now, there is speculation, and there are certain points where things are undervalued or overvalued, as long as there's paper derivatives that are driving that market. Cool, I get that. I think the COMEX is probably done for. A lot of people understand that at this point. You've seen huge outflows from the COMEX, and they've had a hard time keeping up with that, but they have been able to. They've been able to give people delivery on their precious metals and find enough from the mines to be able to cover the outflows. So, I don't know, man. I don't really see a reason why you wouldn't want to convert it into dollars. If you're in a hyperinflationary environment, I don't know why you would sell. Right? Like, that wouldn't make any sense either. You would just hold your XRP or your Bitcoin or whatever other digital assets you had that's appreciating in comparison to the dollar. You wouldn't want to be taking profits, because they wouldn't be real profits. There wouldn't be real ROI. It would be the dollars becoming less valuable. It wouldn't be that your assets are becoming more valuable. You would need a stable price for the dollar and other assets to appreciate to have a real ROI. So, again, same situation with gold. Like, if it gets to $50,000, the US dollar's collapsed. Like, it's the end game. Like, we're going to Mad Max. It's going to be a bad scenario. And you would want some gold at that point, right? And so that's why I do have an allocation. It's my emergency fund. I have physical precious metals that I hold on to, 3 to 6 months worth of expenses for me. That's my allocation. That's what I feel is appropriate for my financial situation. But yeah, you asked what else could you swap it into. If you think the dollar is going to collapse, then you also think that treasury bills are garbage and bonds are garbage. That would be another easy swap for liquidity. You may be able to get into some tokenized stocks. We did talk to a group in Europe that has the capability to allow you to hold tokenized stocks on your cold wallet while we were at Consensus. That was cool. But yeah, anyway, again, this is my biases that I'm imposing on your question here, so I apologize for that. But I'm just answering it candidly. So hopefully that was valuable for you. Sorry if it wasn't. Rambling on, but thank you for the question. Let's see here. C says, Jake, are you looking to hire other RIAs in other states? Which ones? So we're registered with the SEC, and we're an online advisor group. So we can have we can have advisors from any state. It doesn't matter. We have clients across the globe, here domestically in the US and internationally, that we custody assets for, manage assets for. So yeah, it's really about the qualifications of the person and what they're bringing to the table. Not just going to hire any Joe Blow off the street that has a 65. They need, probably to be able to demonstrate that they have a really deep understanding of digital assets. They've been in a space for 4 to 5 years. They understand DeFi. They understand where the space is going. And they need a decent understanding of TradFi also, and the ways to hedge and create strategies that benefit clients and mitigate taxes. The people that we've hired so far meet all those qualifications in spades, and I definitely want to keep the high standards that we've set for the firm. But yeah, would love to have a conversation with anybody that you do think meet those standards and also has a Series 65. Let's see here. Don says, I see a lot of triple-digit tokens with no utility, and I don't get why XRP can't even hit $1. Any idea? They're going to continue to suppress price until it's time to go, in my opinion. So Ripple and other players are utilizing XRP to settle payments in trials. And because of that, they need price stability. They need enough liquidity for those transactions in those markets, and 50 cents provides that. So they're able to hold the price here, and be able to send those transactions, improve the model in the network. And when they're actually, have these other amendments that have been passed, and things are ready to move, I think things will move very quickly, because it is a utility token and it's not driven by speculation. Let's see. Are we going on a little over an hour here? We'll probably run it up for another 15 minutes and then we will call it a night. Don says, I was secretly worried about XRP price ever appreciating, and your explanation of not until we see utility is very disheartening. I've been hoping otherwise for years. I'm just being real with you, Don. I hate that, and a lot of people have been here as long or longer than you. I promise you. I know people that have been here since 2017, and they bought in on the way down from the top. I know it's been a long, hard road. I am very confident that it will be worth it for the people that do wait it out. It's hard to impress upon people the significance of what XRP will be. I don't think I even fully understand everything about it and what we'll be able to do with it on the other side of this, because everything's still unfolding. I know that the people involved with it matter a lot. And if it's given a designation, which again, I think ends up being a tier 1 asset in the banking system, like you can't get any better, man. It's riskless collateral. It's like U.S. Treasuries or gold. And probably even better than that, because you'll be able to earn a yield. Like the only way that you're able to earn a yield on your gold now is like backing governments in their currency. That's a bond against your gold that they have to repay with interest. U.S. Treasuries, they earn, decent yields most of the time. Somewhere between, right now, you're anywhere between 3 and 6%, depending on how long you're holding them for. And you're guaranteed that they're going to pay it, because it's U.S. debt and we can print the money. So that's why it's riskless. Same thing for XRP. I think that you'll have something that very few people right now comprehend where that's going to go and how valuable it's going to be because of the designation and the use cases that it'll have. So don't lose hope. Again, a lot of people have been here a long time, including yourself, seems like. And I'm very confident that it's going to be worth it for all of us. Let's see here. This was interesting. Yes, Glitching the Matrix says, your thoughts on Fetch AI, Ocean Protocol, and Singularity merge on 611, creating ASI. I didn't realize that they hadn't already merged. I know that they had talked about it. I think that all the people that are involved with those networks are extremely intelligent. I think that AI is going to play a very large role in our society moving forward. I know that I use it on a daily basis with, and this usually, it's not really AI, it's like GI. So it's just general intelligence, artificial intelligence. It has the capability to iterate on top of itself. And so, I think we're moving slowly toward that. And at some point we will reach the singularity, and that's when things will really escalate and Moore's law goes exponential. I mean, if we're here on the cusp of that already anyway. But I think this is pretty significant, and I'm excited to see what they're able to put together when they're combining all of those protocols and the bright minds that are participating in each of them. Carl says, thank you, Carl. Appreciate you, brother. I hope you're doing well. If you need some insurance for your business, you need to reach out to Carl. He does benefits. One of the best in the business here in North Texas, and he can take very good care of you. So, but he says, if you haven't already, get in the mastermind. Great people, information, and deals. Yeah. So I haven't mentioned that tonight, but we do run private deals through the mastermind group. We've had multiple allocations that we've put together for Ripple, anywhere from $20 all the way to $30. We haven't had anything above that I can talk about. So, if you are not accredited and you want to be a part of a group and a community, it's a great spot to be. And we do provide access to private investment in a regulated way in that space for people that meet the requirements for a 506B deal. So not accredited and you want to get an allocation to private equity and be able to participate in private deals, would love to see you in the group, and we can explain more once you're in there. So, and I know that sounds like cheesy and crazy and like get you in the group, but like literally the legislation doesn't allow me to market it on here and have a conversation with you. So if you want to know more, like just hop into social and you can learn about it. Let's see. Cypress, what's going on? He says, question. How do you feel about DeFi XRP LLMs and the opportunity for both retail and institutions to allow their assets to work for them by providing liquidity to AMM pools? I think it's going to be a fantastic opportunity, especially when it's at scale and we get adoption by the institutions to be able to, provide liquidity in private markets and other illiquid stuff right now. The use cases here are basically endless. So to illustrate this for people, like why this matters, Link2 attempted to do this. So they go out, source private equity. They allow people to buy into their cap table on their SPVs. And they wanted to be a real-time trading ecosystem where you could buy and sell your private equity at any time. And they had to put up the liquidity on the other side of that. So they had, if they've got $50 million worth of private equity, they've got to put up another $50 million worth of cash to allow people to buy and sell at any time. That's a lot of capital that just sits there, man. And you if you're a broker dealer, you're making fees on those transactions, but until it's at scale, like you're really just not making that much money. You're better off brokering the deal and taking a piece of each one. And so that's kind of the model that they went back to. And they bought Trust Wallet and did some other stuff, and they were going to use standard custody and that side of things to be able to facilitate that. But the AMM allows for that, right? So now if let's say you're linked to or you're a broker dealer and you have all these financial products that you tokenized and people in your ecosystem want to trade, you could then set up liquidity pools using the AMM where you had USDC and whatever the tokenized private equity was. And, you have an amount of money in there that fits that criteria. The people that made an allocation on this side now earn interest for the arbitrage within that ecosystem. And, maybe a base rate that they're able to share with you. And you also get the appreciation of the asset if it goes up in value or down. So I think that's a huge application for this, providing liquidity to, illiquid private investments, real estate properties, syndicated other things. That's a lot of what we're working on at Syndicately. And you also mentioned DeFi here, so later on we've got XLS 64, 65, and 66. Allows you to put up liquidity pools that, for borrow, lend, and earn. I think that there's going to be huge buy-in and application for that. I do think that this is going to be a regulated space. I think you're going to have to be, meet certain qualifications in order to be able to participate under a firm that holds a broker-dealer license. Something that we're working on ourselves to be able to fee share in those ecosystems and provide that service for our clients. Because again, if you're allocating more than 50 million, that was kind of the stipulation that they put forth, is you do have to be a broker-dealer in order to earn those fees. So I know that was a lot, and I just kind of ran through it. But yeah, super excited about both of those things. And I think it's going to be a game changer for people that hold XRP, whether they are institutions or retail. Let's see here. I'm going to get on down. Again, I'm going to try to close it out here in another 5 or 10 minutes. So we'll roll it to the bottom, and then we'll scroll back up a little bit. Here we go. Marie, thank you for the super chat. It's much appreciated. She says, "Hi, Jake, quick question. Could you describe what's the best way to amend the operating agreement after price appreciation from a single member to multi-member LLC to include grown children?" You are the managing member. You do want to set up, when you're gifting the assets to the LLC, being a single member is ideal, and then you're going to be able to gift equity to the other people, unless they put in consideration also to purchase their equity in the business. They're going to have some contribution that they contribute for that equity, right? Or you're gifting a portion of that equity. So that would be the way that I would do that. If you did want to include grown children, would be I would gift them, portions of the equity, and then they would receive that gift in whatever amount it was worth. And that would also be taken out of your lifetime gift tax threshold. And you would have to file a 709 form with the IRS to state that you had gifted that piece of equity to your children. So that would be the way I would go about it. And it's a really good question, and I don't think a lot of people are even thinking about that, Marie. So kudos to you for being on the track a little bit further along than people. Robert Reed says, "Hey Jake, what if I start an LLC? Are there timeframes to have a turn profit to remain an LLC? What do you say the tax may look like if I start an LLC after XRP goes up versus before tax-wise?" Again, it just depends on the value of the assets that you're contributing to the LLC. If you have a significant amount of assets, I would go for a trust over an LLC. The LLC in the short term just provides you the most flexibility to be able to do what you need to post depreciation, whether that's sell and mitigate tax implications, or set up life insurance policies, or move the assets into a trust, or start a foundation, or just lots of different things. So are there time frames to have a term profit? You want to be profitable 1 out of 5 years when you file your taxes. You can basically leave it idle for 2 years with no issues. If it didn't do any type of money during that period of time, you just don't file a tax. Well, you would file a tax return, but it's basically like no income. You just state that you made no income through the LLC. It didn't do any business. And that's fine. If it's 2 years, if it's 3 years, you can start to run into some issues. But you do want to be profitable 1 out of every 5 years in the eyes of the IRS. So if you are writing a bunch of stuff off, you need to show some profit, and you need to pay some taxes 1 out of 5 years. The way that my real estate professor did this in college, he explained this to us. So he was a cattle rancher, and he would do real estate transaction through his consulting business 4 out of 5 years. And the way he would offset the tax implications there, he had his ranching business and his real estate business. And his ranching business, the first year he would just sell the cows, lose money. The next year he would hold the cows and wouldn't sell any cows. The next year, so both those first 2 years he would do a real estate transaction. The third year he wouldn't do any real estate transaction because he would actually make money over here. So he would sell the previous year's cows, this year's cows, and next year's cows, the futures. and he would be profitable there. And then the next year he wouldn't have any cattle to sell, so he would do another real estate transaction. And then again, the next year he would just, sell the cows he had and lose money there. So he would make money on the real estate and offset it with losses over here on his cattle, and then wouldn't have to pay as much taxes. So 1 out of 5 years is, ideally it's 1 out of 3 years that you're profitable, but you can slide with 1 out of 5. You do want to show some revenue and you want to show some profit every single year, ideally. But if it does sit stagnant for a couple years, you're not going to have any problems. So hopefully that answers your question. Going down here to the bottom before we wrap it up. Let's see. Swamp Ming says, "Hey Jake, how would XDC flip ETH at all possible in the next 3 to 5 years?" Anything's possible in the next 3 to 5 years, Swamp Ming. The only way that happens is if ETH gets classified as a security and plummets in value and everything's migrated away from it and moved on to other networks because they're EVM compatible. It's the only way that XDC is flipping ETH. I know, there's a gentleman on here that says XDC is the ETH killer all the time. And I would agree, that the technology that they have is significantly better than Ethereum as a layer 1. But the adoption that Ethereum's seen at this point, there's just going to have to be some really heavy headwinds. And now you've got it integrated, at least the EVM component of it's integrated with JP Morgan and Onyx. You've got Matic, which is just a huge player, Polygon, Uniswap. There's so many things that have been built on top of that network at this point. For it to go away, it's just going to be a controlled demolition over a long period of time. And to your point, you said 3 to 5 years. It could definitely go away in that time frame. And if it does, then there is a chance that XDC, flips it. But it's not going to be, in my opinion, it's not going to be anytime soon. So, Hetty says, "Appreciate all the questions you have answered so far. Very enjoyable to listen to. I was wondering if you might know and be able to share a story of how XRP chose Ripple as their name." I'm not sure what you're saying here. So Ripple, the company, how they chose Ripple, the company, as the name of the company, or XRP as the name of the token? I know the story for how they chose XRP as the name of the token. But as far as Ripple as the name of the company, that came from OpenCoin. They gifted it to Ripple. Ripple is a Grateful Dead song. There's been a lot of references with the 404 Bears and all the other stuff. So maybe that's where they came to the name for the company. It's probably a lot deeper meetings with the Triskelion and the symbology that has. We're moving into the age of Aquarius. And so, water, Ripple, there could be a lot of reasons. And those are all speculation on my part. Those are just some of the coincidences that I've seen. So for XRP, the way that I believe that they chose and came to that conclusion was they actually did call XRP XNS, and then when it was minted, and then it became Ripples after Ripple, was gifted 80% of the XRP. Until 2014, when the IMF wrote a white paper on an exchange rate peg and used the acronym or the abbreviation XRP for the exchange rate peg. And then a few months after that, Ripple changed the ticker from Ripples to XRP. So that's my thesis on it. I really think it ends up being the exchange rate peg, and long-term global markets are priced in drops, which is so crazy to think. I sound asinine saying that, but the whole paradigm that it's existed my entire life has always been dollars. And so to think of a world that's denominated in anything else is just, it's difficult to even conceive. But that's my thesis. Right, I do think that XRP ends up being the predominant currency that's used for global trade and settlement. And if that's the case, denominating things in drops, especially if XRP is a high price, makes a lot of sense. And again, in the age of Aquarius, water, value, liquidity, I think it makes sense. So hopefully, we're right and we're well positioned. I don't think that's going to be tomorrow when that happens. It's going to take a long time for that paradigm to shift, probably longer than I even think. But hopefully within my lifetime. So again, so those are my speculation on how they chose Ripple, the name of the company, and then that's also, that story's never been told specifically by Ripple, but that's the correlation I've made from that white paper that the IMF wrote around the exchange rate peg and the transition from Ripples to XRP. Let's see here. We'll hammer out one more, and then Led Zeppelin says, "What's up, bro? What's going on, brother? Appreciate you hopping in here." I'll end on this one. JG says, if you were completely new to crypto and you had 15K to risk, how would you allocate that? And what would be your first step before purchasing crypto with the knowledge that you have now? This is a really good question. So if I was just coming into the market today, I would probably be entering it in a similar manner as I did in 2020. I diversified across multiple assets that I thought would do really well because I was ignorant. I really just didn't understand where the space was going. I knew that, there was going to be an altcoin season. And so I just was like, okay, I'm going to go deep on like 12 or 15 projects. And so, if I had 15K today to risk and I was new to the space and was just educating myself, I would look at teams associated with the projects. I would vet, the utility of the asset, the use case, where it's going to be in 3 to 5 years. I'm also looking at my time horizon. Is this a short-term flip and like for profit, or am I going to be holding? Is it an investment for 4 years or longer? Or am I a trader? So that would definitely be a consideration on how I would appropriate the 15,000 in the short term here if I was new to the market. And yeah, that I would look at things, and I probably wouldn't go all in on, like, I definitely wouldn't be in the position that I am today. I wouldn't be siloed in XRP if I was new to the market and only had 15K to risk, and just didn't understand, the full scope of everything. I would look objectively at all the projects. Again, I would look at the teams. I would look at what people are talking about and doing research on. I found Digital Dave early on. He's out of Thailand. Super intelligent guys, made a ton of money in crypto. There's a lot of other content creators at this point that have come onto the scene since then that are brilliant, right? Raul Powell with Real Vision, super smart guy, talks a lot about different projects. Layer ones really still haven't been chosen yet at scale for utility. So that's probably where I would be looking to allocate a majority of my capital into layer ones that I thought were going to be adopted at scale over the next period of time that I was going to be invested in the market. And then whatever was left, I might look at allocating at layer twos that had, a lot of utility and volume, or I thought were going to do well in the bull run. Just stepping back into my previous self, that's how I looked at the market in 2020, and I did really well. So hopefully that gives you some value, JG. Not financial advice, can't give that to you. I'm just telling you from my experience and what I did. So, let's see here. Yeah. Appreciate you, brother. Thank you for being here. Hopefully this has been valuable for you guys. I'm going to go ahead and wrap it up. Plug my stuff. If you guys find value here, we'd love to have you. Oh, it's over here in the mastermind group at mastermind.beyondbroke.com. We do have calls just like this every Monday and Saturday. Not just me up there. We have other professionals that are proficient with digital things, and they give a lot of their expertise and time to the mastermind. They're much appreciated. Really proud of the culture that we have there. And again, run the private deals in that group. If you do have questions around tax mitigation, estate planning, wealth management, all the things that you're going to need for your digital assets post liquidity event, check us out. Digital Ascension Group. That is digitalfamilyoffice.io or digitalwealthpartners.net. You can book a time with, appreciate you, nobody. It's good to smile. Anyway, yeah, you can book a time with our team in either one of those respects, and we're happy to work with you guys. Look forward to working with all of you in the future. And with that, we will see you guys on the next one.